one of the clear points we make right up front in the survey is that there's been a revival of economic activity to pre-pandemic levels in the year 21-22. This shows through in the national accounts, and it shows through in a whole bunch of high-frequency data that we have. I've just, for illustration, put the e-way bill collection, and you can see that there was a big contraction during the national lockdown last year, then a sharp revival, a more shallow slowdown during the second wave. So even though there was the health cost of the second wave was much more severe, the economic cost of it, by almost all accounts, was much milder, but there was an impact, and then a subsequent revival. So where does that leave us? Well, as you know from the advanced estimates, the economy this year is estimated to have grown by 9.2% after a contraction of 7.3% in the previous year. And you can see on the slide on the right that it is now a little bit above where it was in terms of economic activity, where it was before the pandemic. So in other words, we have now grown past the pre-pandemic level. What does it mean in terms by sector? This sectorally, we tend to look at it as a GVA, or gross value added perspective. And you can see what happened to different sectors. And the very last column is a comparison with the pre-pandemic era, which is 2019-20. And you will see that the agriculture sector, not surprisingly, this is the sector that was the least affected by lockdowns of various kinds. So this is a sector that grew even in 2021 and then again in 21-22. So in that sense, it is now a little short of 8% above where it was in pre-pandemic phase. The industrial sector did go through a contraction, but then it went through a significant revival as well. And now it is about 4.1% above pre-pandemic levels. And the subsectors went through a slightly different trends, but as you can imagine, the utility sector didn't go through the same kind of contraction because obviously water supply, electricity, etc., don't get shut down during a lockdown. But manufacturing, construction, and other such sectors did go through a contraction and then a revival. In fact, if you look at this, the quarterly data, they will go through this, this downturn, sharp downturn, revival, shallow downturn, and flatter, then a more sustained revival. I scratched my head thinking about what would be a good letter of the alphabet to describe this. And after a lot of discussions with the best minds, we thought that the best we could do was maybe a tilted W. I know it's very awkward, but so I didn't bother to use it. Now moving on to the services sector. Now the services sector is definitely the sector that was most affected by the lockdowns. And you can see that it is just a little short of where it was pre-pandemic. But I think the real story is not in the headline number, but in the subsectors. And you can see finance, real estate, professional services, or public administration, both of these have actually gone back to pre-pandemic levels. But as you can imagine, the contact-intensive subsectors of services have been much more severely affected. And you can see that it is this segment, which includes, of course, tourism, travel, hotels, those kinds of sectors, that is still continues to be below pre-pandemic levels at about 91.5. So it's about 8.5% below where it was pre-pandemic. So this is clearly a sector that is still impacted. Overall, GVA at basic price is about 1.9% above where it was pre-pandemic. Now we can do the same exercise from the demand side, looking at real GDP growth, and you can again see that when you look at total consumption, it is just shy of where we were before the pandemic. Government consumption, of course, has been reasonably strong, not surprising, given a lot of spending that's happened, particularly on the health front, but on other kinds of things, including providing safety nets to vulnerable sections of society and of the business sector. So private consumption, on the other hand, still lags. Now, if you combine this private consumption number, which is at 97.1% of the the pre-pandemic level. And the discussion in the previous slide, you can see where the hit really is, because this is all those contact intensive services where obviously spending is constrained because you are under lockdowns of various kinds. In fact, we are just gone through one thanks to Omicron just in the last few weeks. Meanwhile, the gross fixed capital formation has recovered past the 1920 level. The key point here, of course, is that a lot of this is driven by government spending on capex, particularly on infrastructure, which we will also return to a little later in the fiscal segment that we will discuss. Exports have been a major driver of growth, and you can see they are now very significantly above the pre-COVID level. But of course, imports have also been very strong. Overall, GDP is 1.3% above where it was pre-pandemic. This is in line with what we saw calculating from the GVA perspectives.